Hello my friends and welcome to the channel. Now, I've talked many times on this channel about Tesla of China. And I'm not talking about Tesla in Shanghai. I'm talking about BYD. Yep, BYD is in some ways more vertically integrated than Tesla is. Shock horror. Tesla fans, don't hate me too much. It's true. Guys, remember though, most of my portfolio is invested in Tesla. It is a huge company with huge success on the horizon. I believe Tesla will own 10 to 20% of the global auto market, not the EV market, the auto market by 2030. But I believe BYD will also own a significant percentage of that market, and they have huge, huge potential. And they are still very, very cheap. So, BYD is a top-rated EV manufacturer with global ambitions. Right now, 70% of their entire sales so far in 2021 are EV, or at least battery-based, and they're trending towards 100% by 2025. I think they'll get there quicker than that because of their new launch, a new lineup of EV products on the market, including the very important BYD EA1, what's now being called the Dolphin by BYD, which will be a car based on their new 800-volt platform, likely to provide 250 kilowatt hour fast charging, and it will have BYD's new Blade battery, which BYD say can last for as long as or longer 1 million kilometers. Now, BYD is on track to grow revenues by 25% this year as EV passenger vehicles see strong customer uptake in BYD's fast-growing Chinese market. Now, aside from that, BYD has JVs now with Mercedes and Toyota, and in fact a range of other companies, but the new Toyota coming out in 2022 will be running on BYD's Blade battery 800-volt E3.0 platform. And it's reported recently potentially Mercedes vehicles will be using the same platform as well. Now remember, BYD is the fourth largest battery manufacturer in the world, and they used to be the first largest. They also are a chip manufacturer, so chip shortages probably not likely to affect the company so much, seeing as they make them. And they make many of the most expensive parts that come in an EV. Now, a battery is a very expensive part of the car, the most expensive, but there are actually some other parts in EVs which cost also a lot of money that people don't talk about. And BYD make those as well. Now, another thing that's important about BYD is their cost structure. BYD is able to make profit out of selling EVs when pretty much everyone else selling EVs isn't able to do so. I mean, I believe Tesla is. Some people would say Tesla don't make a profit without receiving funding from companies like Volkswagen and other groups, FCA Group. But guys, that's part of the market, and it will be for years to come. That's not going to change. I'm telling you now, there are many car companies in the world that will have to continue paying Tesla to sell their vehicles. So it is actually part of Tesla's model, and it makes sense. So what do I think is going to happen? Well, I think BYD's stock price is going to accelerate as the demand for zero-emission passenger vehicles accelerates over the next decade. By 2030, the entire global auto market will be EV, and by 2030, BYD's stock price will have dramatically increased to reflect that global demand. Now, BYD has reached critical manufacturing scale, and it is profitable, which skews the risk profile to the upside. Now, if you didn't already know this, one of the hottest markets for electric vehicles is China. More than 10% of all cars sold in China this year have been EVs. Beijing's policy goal to grow EV sales to more than 20% of new passenger car sales by 2025 creates a strong demand situation for China's leading EV brands. In total, more than 1.3 million electric vehicles were sold in China in 2020, and EV sales grew against the industry trend of declining volumes to the COVID-19 pandemic. China is also by far the fastest growing EV market, with a projected growth rate of 24% annually until the end of the decade. So the market opportunity in China is expanding for electric vehicle makers, and BYD is playing a leading role in that market. On top of that, BYD is exporting cars soon to Australia, New Zealand, Norway, and other European countries, and I believe also to the United Kingdom very shortly. And there's going to be huge demand for their vehicles in those overseas markets. BYD's key advantage over other China and non-China based EV manufacturers is that the company entered the electric vehicle market before many of its rivals did, or before they even existed. Now, BYD started off as a battery manufacturer in the 1990s before recognizing the long-term EV opportunity in 2003. The early move into the EV market now provides two very specific advantages that other rivals don't have. For one, BYD has a much deeper product portfolio than, say, NIO, which produces just three different types of sport utility vehicles of varying sizes, all of those in the premium market. BYD manufactures and sells a range of passenger vehicles, with its mid-size luxury Han sedan being one of the best-selling passenger vehicles, with its mid-size luxury Han also providing incredible level of luxury and performance for the price. But BYD doesn't limit itself to the passenger market. It sells and manufactures commercial vehicles, including electric buses, all around the world, of which there were 40,000 on the roads last year. And it sells and manufactures a huge range of different electric utility vehicles and trucks. BYD's portfolio includes electric trucks, forklifts, and a range of different utility trucks, and it's basically unopposed in these commercial markets. It has huge opportunity in these markets. Second, BYD is selling a lot more electric vehicles than other manufacturers, and it already, crucially, makes a profit. It knows how to make a profit out of EVs. That is difficult to do, extremely difficult to do. BYD is already doing it in 2021. So let's have a look at their revenues. Well, mobile handsets and assembly related revenues were responsible for 39% of company revenues in 2020. More than half of revenues, 53%, came from BYD's automobile business. Mobile handsets and assembly is a legacy business for BYD, and the revenue share coming from automobiles and especially new energy vehicles is set to grow enormously over the next decade. Now, in 2020, BYD had revenues of 153.5 billion Chinese yen, or 23.8 billion US dollars, and the fiscal year showed a revenue increase of 26% year on year, despite the automobile market's decreasing volume due to COVID-19. There was an enormous drop-off in the Chinese market, yet BYD still made a profit. On those revenues, BYD made a gross profit of 27.2 billion Chinese yen, the equivalent of 4.2 billion US dollars. This represents a full year 2021 gross margin of 17.8%. BYD almost tripled its profit year on year to 6 billion Chinese yen, 931 million. In Q1 2021, BYD's revenues gained much more momentum. Revenues from operations increased 108% year on year to 41 billion Chinese yen, 6.3 billion US dollars, and BYD's net profit for Q1 2021 was 237.4 million Chinese yen, or 37 million US dollars, up 111% year on year. Now, don't underestimate just how big BYD's opportunity is outside of China as well. I think you're going to see an explosion of sales of BYD's performance cars and cheap cars in global markets outside of China as soon as BYD has the capacity to build those cars and sees the demand for them in countries that they'll be selling those in. So we've established now that BYD is one of the top three largest EV makers in the world. In 2020, BYD sold more than 113,000 plug-in EVs inside and outside the PRC, and the EV company is set to see new sales records this year as EV sales in China are seeing a strong rebound after COVID-19. Now, BYD so far this year, this quarter, has doubled the number of EVs they've sold, doubled versus the same quarter last year. Plug-in hybrid vehicles are driving BYD sales growth along with pure EVs and can be expected to create the biggest profit for the EV maker in the short-term future, but not in the long-term future. Now, in May, BYD sold 46,300 vehicles, including 33,000 new energy vehicles. Now, new energy vehicles are either classified as battery-powered or plug-in hybrids. New energy passenger vehicles are not only the fastest growing subcategory of vehicle sales for BYD, but they are also the most important revenue contributor, as they are responsible for 71% of total sales. BYD's new energy vehicle sales surged 144% year on year in May, in part due to favorable comparisons to the year ago quarter, which was, like I said, impacted by COVID-19. Now, BYD's plug-in hybrid sales soared 357% year on year, and battery-powered vehicles saw an increase of 102% year on year. Commercial electric vehicles saw growth year on year, but are not nearly as important for the company as passenger EVs. Now, commercial vehicles sold in May totaled just 1,200, of which 772 were electric buses. However, BYD did sign a huge number of contracts over the last few months for the manufacture of buses in Europe and the United States, and in fact other countries such as Brazil. Now, BYD had a sales volume of 427,000 vehicles in 2020, and the EV maker should easily exceed 500,000 in total sales this year, both new energy and fossil fuel vehicles. BYD's new energy vehicle sales, passenger and commercial, totaled 190,000 vehicles in first quarter of 2020, and sales could exceed 250,000 units this year. In full year 2020, sales will exceed 250,000 units this year. By the time of May, BYD had already sold 113,213 new energy vehicles, or 45% of potential new energy vehicle sales in full year 2021. So in other words, guys, they're going to probably triple new energy vehicle sales in 2021. Plug-in hybrid electric vehicle sales should continue their post-pandemic momentum this year, and BYD could cross the 1 million mark in EV sales by 2024, or even before that. I think it could happen in 2023. Now, based on accelerating momentum in EV sales in China, I expect BYD to have revenues of over $30.2 billion in full year 2021 and 240 billion Chinese yen, or 37.2 billion in full year 2022. Probably more likely $40 billion in full year 2022, with a stable or growing gross profit margin, which they've already proven to be able to do in the EV sector. Now remember, most of BYD's rivals are not yet profitable and are not expected to make a profit until 2022 at the earliest. So BYD is already profitable, growing sales of more than 100%, and has the cheapest valuation based on market capitalization to sales. BYD's PE right now is 130, as the company has significantly grown its share price over the last few months. I like to think, based on my videos, that's when I started making them, guys. Full credit to me for this. No, joking. Now, as many of you know, watching this video, Warren Buffett's Berkshire Hathaway is an investor in BYD. They initially owned over 10% stake, and that's been diluted now to 8.25%. But Berkshire has never sold those shares, and they buy and sell shares all the time, every day of the week, in fact. That should tell you something about what they see in BYD. Now, BYD also has a balance sheet that provides support for further growth. It gives them cash to be able to do what? Well, to be able to grow their business. Most of the holdings of BYD, stock holdings, are actually owned by the founders. So there's a huge amount of investment money there that could be used by the founders to grow the business. Now remember, cash flow is king when you need to invest and grow your business. Without that cash flow to invest and grow your business, it's very difficult to expand at a rapid rate. Now in Q1 21, BYD had 30 billion Chinese yen in its monetary fund, the equivalent of 4.6 billion US dollars. This gives the EV maker enough resources to invest in its EV lineup and to grow their sales. BYD's total liabilities reached 134.8 billion Chinese yen, or 21 billion US dollars in Q1 21, while the firm's equity was 13.8 billion US dollars. The debt to equity ratio is a quite low 1.5x. Now on the risk side, BYD has less risk than other EV makers like NIO because of its broader product portfolio and its ability to make a profit now. NIO is still ramping up production and sells a lot less electric vehicles than BYD, and it's not diversified across the EV market either. Obviously, BYD does a number of things, manufactures the batteries, manufactures and assembles smartphones, and of course, it also makes chips. Now, NIO's delivery update for May stated that the EV firm delivered 6,700 EVs in May, which is equivalent to just 20% of BYD's total new energy vehicle sales last month. Now remember, BYD sells lower cost EVs than NIO, so it has huge potential. Obviously, NIO is just targeting the premium sector, whereas the majority of people in China right now aren't in that premium sector. There's a far greater ability to grow in the budget to mid-price sectors. Now, BYD's early start in the EV industry creates a situation in which the EV maker can already afford to pay a dividend, which is something other startups, including NIO, Li Auto, and Xpeng, can only dream of. NIO is investing heavily into the build-out of its charging station network, which is a very capital-intensive project, and no dividend will be paid for at least 4 to 5 years. In America, shares of BYD trade only on the over-the-counter market, which creates unique risks as investors have to rely on filings not submitted to the SEC. Now remember, if you want to purchase BYD stock, you can do so in Australia through CommSec, pretty much the only way, or you can do so in America through, probably the best, easiest way is through Robinhood. So, to sum up, BYD is one of the fastest growing EV companies in China, and they are profitable. BYD's ability to post profits makes it one of the safest bets on the global EV market. And BYD's sales growth has the lowest price, and the future for plug-in electric vehicle sales growth in China is enormous. Not only in China, but globally, it's enormous. People are simply underestimating BYD right now, and their share price is still reflecting it. They are still cheap. Thanks for watching. I'll see you on the next one. Bye-bye.